I have decided to step down as the leader of the Liberal Democratic Party.
Japanese Prime Minister Shigeru Ishiba announcing his resignation after weeks of pressure. We're following the fallout here on the Asia Trade. I'm Shery in Tokyo.
I'm Avril Hong in Singapore. As a leadership race shapes up in Japan, Japanese markets will be in focus. The yen and long-dated bonds expected to be under pressure this morning. And we'll have analysis on who the front-runners might be to become Japan's next leader and the challenges they'll have to contend with, Shery.
And we could see a leadership election as early as October, according to local media. Here, April, of course, the prime minister resigning, preempting really a defeat that was expected in today's vote to hold an early election, really a rejection of his leadership. So who will become the next prime minister is a key issue right now. They will serve out the remaining 2 years in Ishiba's term. And of course, a lot on the agenda right now, including ongoing U.S. trade negotiations that Prime Minister Ishiba acknowledges is still not completely done. Take a listen.
This agreement was achieved based on the government and President Trump's administration. It is with regret that our administration could not fulfill our responsibility.
And we're already seeing some reaction to the developments over the weekend on the Japanese currency. It's weakening towards that 148.5 handle, but it is pretty range-bound, all things considered. And you got to wonder as well, does the U.S. jobs data from Friday and the weakness in the dollar provide the yen some sort of cover? Of course, we're going to be keeping tabs on the 30 years in JGBs. They have already been experiencing a lot of weakness. And could this have further global implications if yields climb further to cause this repatriation of funds back into Japan? Of course, as we watch these front-runners, we want to know more about their fiscal plans, but it does seem unlikely that they will show more fiscal restraint than Ishiba, Shery.
Yeah, so we could see that yield curve steepening further in today's session. Take a look at how we're setting up for the Asia market opens, because as Avril mentioned, we could see a triple dip when it comes to Japanese assets, whether it's really bonds, the yen, as well the stock markets. But right now, Nikkei futures pointing to the upside of 1%. Of course, a weaker yen also usually means that we are seeing a boost in the stock price as well. But the volatility from the political landscape could be really that variable in today's trading session. Sydney futures pointing to the downside, 0.2%. We do have also eco data out of China to watch out for, including export numbers. Later in the week, we do have CPI numbers, inflation, factory gate inflation as well. So we'll be watching out for that in the Asian session. But let's turn to our top story today, because it's really about outgoing Japanese Prime Minister Shigeru Ishiba's resignation, setting in motion a leadership race that will be closely watched by global investors. Let's bring in Bloomberg Politics and the economics reporter Sakura Murakami here. Sakura, and we were expecting the Prime Minister to resign given the increasing pressure, but it came a little bit earlier over the weekend. What set this in motion?
So ultimately, it comes down to the two bruising national election losses that Ishiba oversaw while he was prime minister. There was this growing momentum within the party to try and bring him down. There's no protocol within the Liberal Democratic Party to oust a sitting prime minister who's unwilling to go. So that's why they were going to hold this vote on whether to bring up and to hold an early leadership race, which would technically have been an ouster. Surveys over the weekend show that there was growing momentum, that it looked increasingly likely that the LDP was going to kind of hold a no-confidence motion against Ishiba. And then ultimately, he had a chat with former Prime Minister Suga and also kind of Prime Minister hopeful Shinjiro Koizumi. And those two people are powerful, well-known figures within the LDP. They supported Ishiba, and without their support, Ishiba would not really last. So that's probably what triggered his resignation. And
you mentioned Koizumi, for example, as a prime minister hopeful. Who are the other contenders right now in the running?
So the two top contenders right now, we've heard Toshimitsu Motegi is planning to run. But the real focus will probably be on Sanae Takaichi, who is a protege of former Prime Minister Abe, and, as I mentioned, Koizumi, Shinjiro Koizumi, who's the son of a maverick reformist former Prime Minister Junichiro Koizumi. The focus, especially on Takaichi, will be she's very much for fiscal stimulus, so that would probably impact markets. And also, would be the first female prime minister, whereas Shinjiro Koizumi, he's 44, young, fresh-faced, very media-savvy, has very broad public appeal. So they both have their weaknesses and their strengths. It'll be up to the LDP to decide who they want to see lead the party.
As we watch for who these contenders are going to be, what's the next step for the LDP? What are the signs to look out for in the coming weeks?
So, as I mentioned, Koizumi and Takaichi all have their respective strengths. They appeal to different demographics, especially Takaichi would appeal to kind of more right-wing and conservative base. Koizumi has more of a broader appeal. So the next focus will be how the LDP holds its leadership race. And there's a shortened, abridged version that they can hold, and then there's like what's called the full spec version, or like the full version. And depending on which they hold, the number of votes that are allocated to normal, regular, rank-and-file LDP members, normal people who pay their membership fees and support the LDP, the number of votes that they are allocated to them differs. And so if it's a full spec version, then Koizumi would probably have an edge because he has broader public appeal. Whereas if it's if less votes are allocated to those rank and file members, Takaichi would probably have more of an edge because she has more support within the party, within the LDP lawmakers.
Bloomberg Japan politics and economics reporter Sakura Murakami here joining us in Tokyo. Let's bring in Amy Catalinac, Associate Professor of Politics at New York University, where she focuses on Japanese politics as well. Great to have you with us. Of course, we've been focusing on the range of potential contenders for the premiership. But at the same time, when it comes to global investors, they'll be watching what the new prime minister will do in terms of fiscal spending, which will make such a big difference when it comes to Japanese government bonds and also global bonds. What are your expectations of what fiscal stimulus will look like with whoever becomes the next prime minister?
I think it's a little bit hard to say because we're likely to see quite a few contenders in the race. So last year there was an election, obviously, that elected Ishiba, and we saw 9 different contenders, and they all had sort of slightly different views on this. And I think at this time as well, we're likely to see a crowded field. I think it's hard to say, what type of candidate might emerge, but there are a couple of candidates. Takaichi Sanae is one of them, who probably would advocate for more fiscal stimulus and monetary easing. So I know that her stance is pretty clear on that, but some of the others, I think it's a little bit hard to say. Ishiba's decision to step down has literally only just happened, so I'm not sure. We don't have a clear picture yet of who's going to run.
Given that the ruling party lacks the majority in both houses, what does it mean in terms of needing the cooperation of opposition parties, which could mean more spending in the future? And just tell us about the state of the LDP right now.
Yeah, so the LDP has just suffered a really 2 bruising electoral losses. So it's been kicked out of its majority in the lower house last year, and also it's lost its majority in the upper house. So the LDP has to go through a period of trying to figure out what went wrong in these 2 elections. So they're going to be looking for a person who can kind of set the party on the right track and come up with reasons why the party lost some of its conservative supporters. In the previous election, it was clear that it did so, and why it also failed to mobilise votes among so-called floating voters, people who are sort of non-partisan and don't have strong attachments. So the opposition, but as you said, Prime Minister Ishiba, who's now stepping down, one of his sort of signature achievements, I think, while he's been in office, was his astute management of relations with the opposition. So since October last year, the LDP has been in a minority in the lower house, And Prime Minister Ishiba was very good, in my opinion, at mobilising support among this party for this bill, that party for the budget, another party for the supplementary budget. So he did a very good job of managing relations with the opposition parties. And whoever the party selects now to replace him is probably going to have to draw on that expertise potentially, or maybe the party will try and choose someone with that expertise because they don't have a majority. So the first thing the person has to do, by the way, is actually win the vote in the lower house to become Prime Minister. And so that in and of itself is going to require some, because the party doesn't have a majority, it's going to require some people from the opposition. So that was something Ishiba did quite well, and so the party will probably be thinking about that as they choose a potential contender for his replacement.
Professor, as we were hearing from our colleague Sakura earlier, we are also waiting to hear whether this leadership election is going to be a full spectrum one or under emergency rules. How might either way shape the outcome?
Yeah, so the full spec version is the one that we had last year, the one that elected Ishiba, and that's one in which the rank and file get to vote. And there's about 1 million LDP members right now, and they all cast their ballots. They all get sent ballots in the mail. They cast their ballots, and they're translated proportionally into the same number of votes that the LDP diet members have. So that's the full spec version. The abridged version, the sort of the quicker version, can take place via a plenary session of people in both houses of the Diet who are LDP politicians. And in that instance, each LDP politician, there's 295 right now, they have 1 vote each. And the prefectural chapters, of which there are 47, so the party has 47 prefectural chapters around the country, they all get 3 votes each. And it's also a runoff. So the election rules do differ across the two full spec versus abridged versions. But as the former commentator said, the abridged version gives more weight to diet members' votes. And so the full spec version, all the party members get to vote, and in the second, they don't have the same weight. And so that could lead to the full spec version does prioritise someone with a lot of broad support throughout the country. So I'm not sure exactly how. I don't think Prime Minister has announced which one is going to take place, but there are some slight differences there.
Speaking of support, regardless of who the contender is, what is your sense of how factions within the LDP might provide that sort of support, including Taro Aso's faction, for example?
Yeah, so the reason that we saw such a crowded field last year with 9 contenders, and we're likely to see sort of quite a few people this year, is that factions have really, they've been substantially weakened. So they've basically been dissolved last year in response to the slush fund scandal. So I see there are sort of 2 groups that remain. But I don't see them as having a lot of power actually in this vote. I think it's likely that people are going to vote according to who they think should become the party leader. However, if you are a faction leader, you have a sort of an incentive to sort of argue that you played a role in the election of this person because you want that person to help you and to help you please your faction members and pass policies that you want after the election. But I don't see factions as playing a big role in this election at all. There could be some, maybe in the runoff and the convincing people to change who they voted for it if there is a runoff. In those scenarios, the 2 remaining groups might play a role. But in general, I think we're going to see a lot of contenders, and people will probably vote according to who they think can sort of take the party ahead and try to recoup some of its support that it's lost in these 2 previous elections.
Amy Catalinac, really good to have you with us, Associate Professor of Politics at New York University, as we continue to follow the fallout from the resignation of Japanese Prime Minister Shigeru Ishiba. Take a look at how U.S. futures are trading at the moment. We're seeing upside after stocks fell on the Friday session. We had that data showing sharp cooling in the jobs market, which also led to treasuries rising. That flight to safety, but also investors pricing in Fed cuts on that soft labor data. We continue to watch the bond markets very closely especially given what's happening here in Japan. We have seen global yields spike higher with JGB yields when there's change here in the country. Take a look at Brent crude, very important because we saw the production boost coming from OPEC+. More ahead on the Asia trade. This is Bloomberg.
At that whole situation. We have a lot of industries that we don't have anymore, and we're going to have to train people. And the way you train people is bring people in that know what they're doing and let them stay for a little while and help. So I'm going to look at that. It's a very interesting situation that took place in Georgia. And we heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right?
Is it straining the relationship with Korea at all?
No, we have a great relationship with South Korea. Really good relationship. You know, we just made a trade deal. But I'm going to look at it because I understand exactly what they're saying.
So, Page 6 crowned you the king of the U.S. Open. They put out all these old pictures through the years of U.S.
Wow.
and U.S. Open. What does it mean for you to go back after going for so many decades, growing up in Queens? Now you're going back as the president in a different capacity.
Well, I loved it. First of all, the two players have unbelievable talent. It just seemed that they hit the ball harder than I've ever seen before. Incredible talent. And I enjoyed it. And I used to go all the time, but, you know, lately it's a little bit more difficult to go. I really enjoyed it. They were really nice. The fans were really nice. I didn't know what to expect. Usually you would say that would be a somewhat progressive, as they say nowadays, crowd. Sometimes some people would call it liberal, but we'll use the word they like to use, progressive. But they were great. The fans were great.
Mr. President, back on Russia. Russia had a pretty big attack on Ukraine over the weekend.
I know all about it.
You have always said how good your relationship is with President Putin, but he's not really giving you anything that you want. Is that making you less trustful of him?
Well, nobody was tougher in Russia than me. That has to do with the pipeline, as you know, Nord Stream 2 and lots of other things. But I'm not happy. I'm not happy. I'm not happy about the whole situation. You know, it's interesting. It doesn't affect us because it's not our soldiers. But they're losing now. I used to tell you 5,000. They're losing 7,000 between Ukraine and Russia, 7,000 soldiers every single week. It's such a horrible waste of humanity. So, no, I am not thrilled with what's happening there, I will tell you. I think it's going to get settled. So I settled 7 wars. This, I would have said, would have been maybe the easiest one to settle of all. But with war, you never know what you're getting. But we're going to get it, I believe we're going to get it settled. But I am not happy with them. I'm not happy with anything having to do with that war. It's just such a waste of great humanity.
The greatest obstacle to a peace deal in Ukraine?
Say it?
As of right now, what do you think is the greatest obstacle to a peace deal?
Well, we're going to see. I mean, we have some very interesting discussions. You know, Europe, certain European leaders are coming over to our country on Monday or Tuesday, and individually. And I think we're going to get that settled. I think we're going to get it settled. We have to. You can't lose. You know, when they're losing 5,000 to 7,000 soldiers a week for no reason, you have to get it settled. Of all of the wars, whether it's the Congo and Rwanda, they said it was impossible to settle. You look at every one of it. I mean, every one of these wars were impossible. I got every one of them settled, 7 of them. 7. This was the one I really thought would be the easiest, but it's not. But I think it's going to get settled.
So there was some reporting in Axios that in the last 3 months of the Biden administration, they did about 4,000 pardons. The chief of staff's assistant was sending emails to pardon his own family members. Are you still interested in getting to the bottom of the auto pen scandal?
Well, I think the auto pen is one of the great scandals of our time. The auto pen was our president, or to put it a different way, whoever operated the auto pen was our president.
If you
it's not allowed. It's just not allowed. And they gave a pardon to the Unselect Committee after the Unselect Committee realized that that whole situation was a hoax and it was all their fault, including Nancy Pelosi turning down security and all, turning down soldiers. It all came out bad for them. They burned everything. They got rid of everything. There's absolutely nothing there. It's all gone. And that was based on an auto pen. They gave those members of Congress that were on the Unselect Committee, they gave them pardons.
What do you think?
So I think it's a tremendous scandal.
What do you think the media would say if you pardoned your case your last day in office via an auto pen? Don't you think the media would go?
Well, I think it would have been a big story.
Would have been.
I like this guy.
Multiple times on a Charlotte subway. You've seen this video, and do you have any reaction to it?
Yeah, where was the subway? Was where?
She was in Charlotte on a light train. She was stabbed multiple times by a...
Horrible. No, I haven't heard. Okay. When did this happen?
It happened in August, but the video just came out.
I see. Yeah, I see the video. I'll know all about it by tomorrow morning. Okay? Thank you.
Do you have plans for Chicago this week?
No, not really. Not really. We're going to go someplace. We're picking. Look, D.C. now is 100%. I don't want to say 100, but it's pretty close to 100% healthy, happy, thriving. It's a crime-free zone. You know that. You could go out to dinner tonight, Jeff. You could go out to dinner, and you most likely will not be harmed. You know that. You won't be beat to hell.
There's still some crime.
There's
still some crime.
Very little. And within a week, there will be nothing. Do you agree with me?
I feel much safer walking around. I can't fight them.
No, it's a safe place now. But
you've been talking a lot about Chicago, and there was
Chicago's been talking a lot. So, Chicago last week lost 9 people were killed and 28 people were shot. The week before, it was 7 people were killed and 37 people were shot. The week before that, it was the same kind of number. Chicago is a very dangerous place, and we have a governor that doesn't care about crime. I guess we could solve Chicago very quickly, but we're going to make a decision as to where we go over the next day or two. When you look at what happened to D.C. in a short period of time, honestly, it's amazing. Over a period of 12 days, in other words, on the 12th day, we had the crime just about solved. And right now, people are walking down. They're going out right now to restaurants all over D.C., whereas if you go back a year ago or 6 months ago, nobody was going out. Nobody. We did it in 12 days. Now it's better than it was in 12 days. We'll make it even better, and then we're also going to clean it up. We're going to clean up the city. We're going to make some great improvements to the roads, to the medians, to all of the signs. You got signs that have been up for 30, 40 years. They're worn out. They look like hell. We're going to redo the signs. We're going to put up new signs. It's going to look beautiful. Within a 6-month period, it'll look really beautiful. But you have essentially a crime-free zone. I mean, here we are on a nice Sunday evening. If you'd like, it feels like Saturday, actually. If you like, you could go out and you could have dinner on me, but you wouldn't do that. But you could have dinner on me if you'd like. Go ahead. What else?
When do you plan to speak to President Putin next? And what
Very soon. Over the next couple of days. Look, we're going to get it done. The Russia-Ukraine situation, we're going to get it done. I have confidence we're going to get it done. Think of it. I got 7 done, all of which were impossible to do. If you look at any one of the 7, you know them. I don't have to go through them. Many of them were impossible. One was 31 years, 10 million people killed. One was 34 years with 8 million people killed. How about the Congo? They lost 9 million people, and it went on for years with Rwanda. All settled. Everybody happy. The one that I thought would have been, for me, the easiest, because of Putin, I thought that would have been, it's not turned out that way, but we're going to get it settled.
You brought him in to discuss the Gaza issue and help make peace in Gaza. What's some of the advice he's giving to you, and why did you bring him back in to work on this deal?
I think we're going to have a deal on Gaza very soon. It's a hell of a problem.
What gives you
Again,
that
it's a
optimism?
problem we want to solve for the Middle East, for Israel, for everybody. But it's a problem we're going to get done. So they have hostages. It could be a little bit less than 20 because some, they tend to die, right? They tend to die. Even though they're young people largely, they're dying. Young people don't die. Young people stay alive. But with this whole thing, they tend to die. But we have, let's say, 20 people, and we have about 38 bodies. Bodies, meaning bodies.
Are you confident you can get them all released?
Yeah, I think so. I think we're going to get them all.
Did you see the turnover of the Japanese Prime Minister stepping down? Do you have any reaction to that?
No, I was surprised because I knew him. I liked him. And he's just now stepping down. A little bit surprised. I found him to be a very nice man, actually. We dealt very well together.
Mr. President, the price of beef continues to rise and other items keep going up. Is there any way to address the cost of beef?
Yeah, once it kicks in, once our policies kick in, the price of beef will be going down, just like the price of eggs went down and the price of a lot of other grocery items went down. Beef will go down. It'll all go down. Energy has gone way down. The price of gasoline has gone really, I think you'll be hitting $2 very soon. And it was $4.50 a little while ago. So energy's gone way down. That brings everything else with it. But beef has gone, as you know, for other reasons. The price of beef has gone up a little bit. It'll be coming down.
Before you went to Alaska, in the Oval Office, you said that the First Lady expressed she wasn't too enamored with Putin. You said you came home, you said you spoke to Putin. She said, well, I heard he just blew up a village today. Has she expressed anything since you've come back?
No, the First Lady actually got along great with Putin,
right,
as I did. But, we're disappointed. Both of us are disappointed that this ridiculous war continues.
Are you proud to see her sending the letter that she sent?
Yeah, she is. She's felt very strongly about the children. Yeah, feels very badly about it. Thank you, everybody.
Thank you. Do you have plans to go to Japan and South Korea this fall?
What does that mean?
Or do you have plans to go to South Korea?
Maybe. We'll see. But it's going to be very interesting what comes out. I think we may have learned something because when they come here and there's nobody that can do what they're supposed to be doing and they bring people, those people can also teach our people. It's complicated stuff. And something very interesting could come out of that. Thank you, everybody.
President Trump there speaking on a range of issues, even reacting to Prime Minister Shigeru Ishiba here in Japan resigning over the weekend, saying that he liked him and that they worked well together. Asked whether he would go to South Korea or Japan in the fall. He did not clarify that, but he mentioned how people coming to the United States should train Americans when it comes to doing their jobs. And that really in reference to what we saw also, that immigration raid at the EV battery plant run by Hyundai and also LG Energy Solutions. We have seen that Hyundai Group stocks gaining ground this year, but of course this really puts into question the future of Hyundai's EV production plans across the United States. We have seen the release of 300 of South Korean citizens agreed by Korean officials and also U.S. officials, but President Trump saying that Korean workers in the plant were illegal, but that they do have a great relationship with South Korea, Avril.
Take a look at how Japanese assets are faring after the announcement of resignation of Prime Minister Shigeru Ishiba. We are seeing the yen weakening towards that 148.5 handle. And based on what the Chicago Nikkei futures are pointing to, we could see upside in Japanese stocks, maybe helped along by gains in some of these export-related names against the backdrop of what we're seeing in the yen. JGB is also the futures pointing to some gains. For more on the market action in Japan, let's bring in Bloomberg's MLive strategist, Mark Cranfield. So, Mark, looks like quite an interesting setup. Maybe we avoid that triple dip, given how the yen is faring. Might that help Japanese equities? Focus is on the JGBs. How much of a jolt are you expecting potentially?
JGB is probably more about the curve. You probably see steepening there. The investors will come to the quick conclusion that the Bank of Japan interest rate hike, which was a possibility for October, is likely to be off the table pretty quickly. It's going to be very hard for the Bank of Japan to proceed with a rate hike, given that they won't know who the new leader for Japan is, or they may know by the time of their meeting, but there's going to be several weeks of uncertainty. And so that will incline the Bank of Japan to push back further. So it doesn't look as though the yen is going to get any help from the Bank of Japan. That will keep inflation going in Japan for longer. That will hurt the long end of the Japanese curve. The short end will probably stay reasonably anchored. It's getting help from the US. The US now is looking towards a rate cut pretty quickly. And the discussion of 50 basis points for the Federal Reserve will certainly be there. So people will be thinking there could be an even bigger cut that will help to keep short-end rates soft. And then when you think about what it means for Japanese equities, obviously longer the yen stays weak, that's got to be good for Japan stocks. And on the other side, they will expect whoever is the next leader in Japan that they'll want to get on with a bigger spending boost as soon as they possibly can. So that, again, is something that Japanese equities will feed off. So it's not surprising that the futures are pointing to a much stronger start here. And this may well be enough to trigger the topics going through the recent highs in August. We may see an extended run here for Japanese stocks, particularly as the global backdrop is pretty good. US stocks at pretty high levels as well. So that all helps to support Japan.
Mark, JGBs have been very consequential for global bond markets as well at a time when we continue to see the pressure on the long end. Fiscal concerns really a worldwide issue at this point. How does that factor in with other data that we're getting from the U.S., like inflation numbers and, of course, the path of the Fed?
Well, certainly it would have been a lot more dramatic had we not had those job numbers last week. So now investors are much more certain that the Federal Reserve has what it takes to lower interest rates, possibly even by more than 25 basis points. So that the fact that treasuries are going to stay strong probably got even further to rally. That helps the whole G10 complex. So even if you get some weakness at the long end of the Japanese curve, the read across will not be as dramatic as it would be if there was instability in other markets as well. That it's going to be absorbed by the good news coming out of the treasury market. So whether we see political chaos in France, more in the UK, Japan, all of that to some extent will be subdued in the markets because treasuries are by far the most important market. And if treasuries are looking good, that will take out some of the steam in what we see in other markets. So curve steepening is the easiest way for investors to play that. If they do think there's higher political risks outside of the United States, then of course that's what they can do. But we're probably not going to see the huge contagion that would have been possible had the US been in a more neutral position. The impact would have been a lot better, but it's not. It looks as though the Federal Reserve not only is going to cut rates in September, but they may well have to follow up with further cuts before the end of the year. So that will help bond markets globally.
Mark, thanks so much for your insights. Bloomberg's MLive strategist, Mark Cranfield. Now let's bring in Candace Browning, Global Research Head at BofA, and she joins us from the BofA Securities Asia Pacific Conference in Hong Kong. She was also just in Tokyo last week. Candace, maybe let's start there out of Japan, because we are seeing futures pointing to some upside. What is your sense of, from your Tokyo trip, in terms of corporate governance reforms, maybe fiscal stimulus expectations, a cheaper Japanese currency, how that might fuel further Japanese stock gains?
So thank you very much. So when I was in Japan last week talking to investors, I guess if I had to sum up the overall feeling, it would be sort of that quote from Oliver Twist when the young boy says, "Please, sir, may I have some more?" So basically, I think that equity investors in particular really like the deflation story in Japan, and they really like the corporate reform story. And that corporate reform story seems to be, if anything, accelerating rather than decelerating. Now, you know, over the weekend, we did have the surprising news about Prime Minister Ishiba, resigning. And I think that, that does have some very strong implications depending on, of course, who takes his place. But I think overall, the equity market, as long as the corporate reform story stays in place and the deflation story stays in place, I think the equity market will be absolutely fine. I think there's some questions in the bond market as it relates to what will the new leader's policies be, regarding fiscal spending and monetary policy as well. But to answer the question in a nutshell, overall, investors remain quite positive on Japan.
To quote another Dickens novel, Great Expectations, let's talk about AI. Where are you seeing opportunities in the Asia Pacific there?
Yes, I think there are enormous opportunities, the best of times and the worst of times, but I put more of the emphasis on the best of times. You know, about $350 billion was spent on AI this year. We project that by 2030, that spending will rise to about $1.2 trillion per year. So if you add, you know, the whole period together, you're looking at $3 to $5 trillion being spent on AI. And just over $1 trillion of that will be in Asia Pacific. Asia Pacific is very much the backbone of all of the components that go into developing AI, whether it's the AI foundries in Taiwan or the HBM in Korea. You know, Asia Pacific is a very important component of this new AI infrastructure. So we're very positive on that, and that is actually one of the tracks that we're emphasizing at our conference here in Hong Kong.
How much of that boost in AI here across Asia will also be made up of China? Of course, we have seen the optimism over Alibaba's investments into this sector as well.
Yeah, so listen, I think that China, you know, which you know, the innovation that's been coming out of China as it relates to AI has really been very positive over the last year or so. And I think that really has contributed to a bit of a turnaround in perception of the Chinese market. And as you know, it's been reflected in the very strong stock market performance in China as well. So China's a key component of this new AI infrastructure and backbone throughout Asia.
When it comes to monetary policy, given, of course, that we are seeing divergent paths, whether it's from the PBOC or here in the Bank of Japan and perhaps a delay of normalization, what sort of dynamics will you be on the watch out for in the next year, especially given also the political landscape is a little bit unstable at the moment?
Well, you know, in the U.S., you know, given the very weak jobs report that we had, we're now expecting actually 2 cuts, one in September and one in December. And then we think there won't be any cuts until June of next year. And it's kind of a complicated story that they're dealing with, because the reality is that it would appear that the job market is definitely weakening, although the unemployment rate still remains historically low. And we don't really know, by the way, what happened in the jobs market. Is it a result of new immigration policies, which were sort of a supply cut, or was it that employers simply were demanding fewer new jobs? We don't really know that. It's a little bit murky. But on the other hand, what the Fed has to deal with is the fact that inflation remains stubbornly above their target and may, in fact, go even higher. So they're dealing with a very complicated situation. We do think that they're going to muddle through. We don't think that there will be a recession, and one of the reasons for that is consumer spending in the United States. Even using our own internal Bank of America data, consumer spending has remained resilient. And also, if you think about AI and what I talked about previously, you know, you've got a lot of cap spending going on, whether it's AI or it's sort of made in America, bring manufacturing back to the U.S. And you've got the One Beautiful Bill, which is a stimulus. So, you know, yes, there's some problems in the job market, but there's a lot of positives as well.
And the inflation outlook, I think, is still something that we should be focused on. Candace, thank you very much for your insights. Good to chat. Candace Browning is Global Research Head at BofA. Let's take a look at one element of the inflation trajectory. Take a look at commodities prices. This is, of course, after OPEC Plus commitment to hike output. We're seeing it, maybe something that was already sort of expected by the markets, and oil prices are climbing at the moment. Let's bring in our Asia Energy team leader, Stephen Stepczynski. So, Stephen, talk us through this thinking by OPEC Plus and how expected was it? Was it already mostly priced in by markets?
You know, I think there was a surprise aspect of it, but there was no awe, in the sense that, you know, there was not an expectation that they would add the supply. Yes, the market was hedging their bets with the prices falling last week, and you did see that. But I think in the previous increases that they've had, where they surprised the market, there was that awe. There was more supply that they were adding. They're just adding about 130,000 barrels a day. That's compared to basically almost, it was about half of what we were seeing in the previous months when they're adding that tranche. Of course, we weren't expecting this supply to come back until the end of next year. So there is a surprise there. But that being said, it seems that the market is looking at this and it can be digested. It's unclear whether OPEC Plus is going to be doing this every month for the next 12 months. They might, but it's a gradual increase in supply. Likewise as well, the market's going to be closely looking at actually what do they produce and what are they exporting? Because you can say that they have these higher targets, but there are some countries that were producing over their output, so they're not going to be able to increase. They're kind of playing catch up. On the other end, there are other countries that can't produce much more. You know, Saudi Arabia famously has a lot of spare capacity, but OPEC Plus is not just Saudi Arabia. So there are going to be a lot of different things that the market's looking at. Right now, yes, surprise. Yeah, probably the market was to some degree expecting something to come out of this, and they were hedging their bets. But still, it isn't the shock where you're seeing markets kind of really crumble under the weight.
And what does this tell us about the whole strategy from OPEC Plus, especially when it comes to really bearing with that perhaps scenario of oversupply in order to gain market share?
You know, I think you can read this two ways, right? The straight way to read this is that OPEC Plus and their analysts, they've got some of the smartest people in the room, clearly see that the market can take more supply. And in fact, they're kind of a counterbalance to other analysts who say that there will be a large glut. You know, they've consistently said, especially with their previous increases, that they're not doing this necessarily to take market share. They're doing this because they see this as a way to balance the market. Now, the other way to read this is, yes, they are trying to take market share away from U.S. shale producers. You know, you famously see Conoco cut workforce 25%, due in part to the weaker market. They're a major producer of oil. I think this isn't just a coincidence. The shale producers, U.S. oil producers, are hurting under these lower prices, whereas OPEC Plus can weather this storm. They can sort of sweat the market, as Carnegie once did over 100 years ago, and this is a way for them to potentially kind of ease out those other folks in the market. There is a flip side, of course. Not every OPEC member loves Brent at $65 or below $65. It doesn't balance their budget. But in the short term, as they try to get more market share and as they try to capture more customers and kind of squeeze out other marginal producers, maybe in the U.S. and elsewhere, this could be a strategy that they're moving on.
Stephen, thank you so much for helping us unpack everything that's happened over the weekend. Asia Energy Team Leader Stephen Stepczynski. More ahead on the Asia trade. This is Bloomberg.
I thought that as Prime Minister, I needed to take responsibility for the result in the election. Having seen the U.S. trade negotiations through, I felt that now was the right time to stand down and give way to my successor.
JGB futures moving higher at the moment. Of course, it's all about the questions of fiscal discipline after Prime Minister Ishiba resigned. Who can become the next Prime Minister that could potentially be even more hawkish than him is a key question. Nikkei futures pointing to the upside of more than 1%. Of course, we continue to see the Japanese yen weakening against the U.S. dollar. Expectations of perhaps more stimulus, perhaps the Bank of Japan policy normalization also being delayed. Some of those factors that are weighing on the market right now. But let's discuss all of this. And joining us now in studio is Kei Okamura, portfolio manager at Neuberger Berman. Also Tobias Harris, principal at Japan Foresight. It's really great to have both of you. Let me start with Kei, because we're already seeing Japan bond futures moving at the moment. Is it all about the expectations of what will happen on the fiscal side of things?
Yes, there will be that element, just given the fact that a lot of that has been in the top minds of global investors over the last 6 months or so. But I think also going forward, what that also means is that on the other side, there's going to be a lot of expectations about economic stimulus going forward, given that some of the contenders like some of the expected contenders like Ms. Takaichi is a fiscal expansionist. I think that will be very much on the top of mind. So watch out for sectors like industrials, part consumer discretionary. All of those will likely see some choppiness over the next month or so as investors brace for the next month.
Tobias, so what are you expecting in terms of who the leading contenders could be in an election that now local media say could be as early as October?
Well, the next leader has, I think, a pretty full plate. And I think, just even setting aside policy, I mean, I think that the LDP is now in a situation of really trying to find a leader who's going to knit the party back together. It's been a really messy year, or really a couple of years for the LDP. And so they're really going to be looking for unity. They're going to be looking for someone who can really address some of the reforms that, if you look at the party's election postmortem from earlier in the week that contributed to Ishiba leaving, there's a lot of work to do to reconnect with the public, to update the party, to really get them to a point where they're communicating with the public again. And then, of course, back to those policy questions. What are you going to do about fiscal stimulus? You have the budget for next year in the pipeline. You, of course, have ongoing issues with the United States and with China and with other countries in the region. So there's a lot of work to do for the next leader. But I think the LDP is really going to be thinking about how do you get out of this mess where, if you had an election tomorrow, it's pretty easy to see how the LDP could wind up in opposition again. So I'm not convinced that Takaichi is necessarily the right person for that, and I think a lot of people in the LDP feel the same way. I suspect that from right now, without anyone having declared, that Koizumi Shinjiro probably has an edge over anyone else, but really it's an open race as of right now.
So even getting to the election, of course, there's a lot to do, Tobias. What are we seeing in terms of the procedural way forward? Because we're hearing it could be under emergency rules, or it could also be just under a full plenum as well.
Well, they've been having this debate for the past several weeks, right? Because we knew there was supposed to be this vote Monday. The LDP was going to decide whether to move up the leadership election anyway. So there's been a lot of discussion. How soon would you do it if the motion passed? Should they do it under full rules? Should they do it under emergency rules? I mean, I suspect, and I think we've seen reporting to suggest that they're going to go for what they're calling a full spectrum election, where you get full participation by grassroots members. In part because, again, if the goal is how do we reconnect with the public, how do we reconnect with our own supporters? How do we get people excited about the next era of the LDP? Well, having the rank and file members participate certainly seems to be part of that. So I suspect they'll go that direction. Unless, of course, the party shifts so quickly and it feels like there's a fast-forming consensus around one candidate, and maybe they will do the emergency rules. But I don't think we're going to see that necessarily.
We're getting breaking news out of Japan at the moment as well. Second quarter GDP number surprising to the upside. This is the revised final figure, annualized growth of 2.2%. The estimate was only for growth of 1%. Of course, we have seen some momentum in the Japanese economy. Quarter on quarter is also growth of 0.5% at a time, of course, when we continue to expect perhaps the Bank of Japan to come out with a rate hike as early as October. And of course, a variable now is that we have a prime minister leadership election for the ruling party here. We're also getting the current account balance as well. We are now getting those numbers on the terminal. It is a surplus of 2.68 trillion yen. But let's continue to discuss the state of the Japanese economy and turn to Kei, who is still here with me. Given the strength of the Japanese economy, people were expecting the Bank of Japan will move as early as October. But now the leadership election is a key question. What will investors be watching out for in the next couple of months?
Unfortunately, if we look back the last several years, the changement of the prime minister has become almost like an annual occurrence, August, September. And as a result, this has sort of meant for many global investors that, politics aside, I think the economy is probably what's most important and the outlook for what the BOJ might do next. That said, we have seen back in the Shinzo Abe era what a stable political environment can do for Japanese equities. And I think that is one of the reasons why we are seeing equity futures higher today. And we do think that down the line, if there is a stable political environment, that would definitely bode well for Japanese equities, especially the mid-cap section of the market that has lagged over the last sort of 12, 24 months or so, especially those companies that we think are very aggressive in terms of capital management reforms. Those will likely be in a very good situation going forward.
How much does Japanese yen factor into the equity markets these days? Because it's been pretty range bound.
It does factor in. We can't ignore it. But at the same time, I think somewhere between here and 140 is a palatable environment for many company management. That said, if we see some volatility where if we see swings up to 130 or if we see swings down to 150, that would not bode well for Japanese management who need to plan ahead in terms of capital spending going forward. So I think let's get these elections done. Let's find out who the next prime minister is. But then there needs to be a stable political environment and a good way for the Bank of Japan to continue raising rates going forward.
And Tobias, of course, the state of the economy, very important when it comes to the broader Japanese public, but that doesn't necessarily make such a big difference when it comes to the leadership election of the LDP.
Yeah, well, I mean, I think we've seen a kind of disconnect in a lot of conditions, that in the last few weeks, of course, we've seen Ishiba's poll numbers going up, and that didn't really make a difference as far as sentiment within the party. And I think that there's I think a really important need here, when we think about this leadership election coming up, what is the mindset of the electors going into this election? So it's the lawmakers, it's going to be the prefectural chapters and the rank and file dues paying members. And really, they're very focused on the reality the fact that the LDP has lost 2 straight national elections. There's, I think, a profound sense that the party is completely out of touch with voters. They've lost voters they used to get in the past. They've lost independents. They've lost young voters. There's a feeling that the party is just not meeting a lot of voters where they are, and that there's just a lot of work to do updating the party, modernizing the party, a lot of internal governance issues that have to be addressed. And so I think keeping that front of mind, I think, over the next few weeks is really important, that this is not necessarily going to be an election that's just going to be decided on the issues or on the platforms. I mean, of course, it's going to be part of the discussion. There are some real differences between the right wing and the left, or reformist wing, let's say, not left wing. Let's not go crazy here. There's going to be some real differences, and so there's going to be policy discussions, but front of mind is going to be, how do you modernize the LDP? How do you reform the LDP? What kind of party is the LDP going to be if it's going to get through this crisis and when the next general election rolls around, actually be in a position to actually win it? And that really is going to be front of mind, I think, for just about everyone during this campaign.
Tobias Harris, good to have you with us, Principal at Japan Foresight, and Kei Okamura here joining me in the Tokyo studio, Portfolio Manager at Neuberger Berman. Thank you so much to both of you for joining us as we head to the market opens in Japan. Of course, we have seen already JGB futures moving higher. We continue to see the Japanese yen falling against the U.S. dollar. Nikkei futures pointing to the upside as well after we heard over the weekend about the resignation plans for Prime Minister Shigeru Ishiba. We're now headed towards a leadership election as well. The market opens are next. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens, and the countdown also on for the leadership election here in Japan after Prime Minister Shigeru Ishiba announced his resignation over the weekend. Of course, what that means for the market's a key question as we continue to see weakness on the Japanese yen. The new Prime Minister will serve out Ishiba's lasting 2-year term.
Yeah, and also over the weekend, we had the OPEC plus supply hike that is committed to, which has been characterized as relatively cautious. So we're going to be watching that in the session on commodity prices as well, Shery.
Yeah, we will be watching those oil-related stocks across Asia as well. But take a look at how the Japanese market is coming online, because we have been watching the Japanese yen weaken against the U.S. dollar. We have seeing also JGB futures move. Of course, the key question is how fiscally conservative will the new Prime Minister be? The expectation is that there will be nobody more hawkish than Prime Minister Ishiba at this point. What that means for already the existing pressure on the long end of JGBs is a key question. We had already seen 30-year JGB yields trade at record highs last week. Nikkei stocks at the moment rising, of course, the expectation of more stimulus, a weaker yen that usually benefits the stock market. So we'll continue to watch the market as we are also digesting the GDP numbers for the second quarter. The final figure coming into surprising on the upside, growth of 2.2% on an annualized basis. So what that means for the Bank of Japan as well, because expectations of that rate hike that were as soon as October may have been pushed back because of the uncertainty on the political landscape. But take a look also at how Korea is coming online. Of course, what we've been watching are the Hyundai name groups, because President Trump also commenting in the last few minutes about that immigration raid on that Georgia EV battery plant run by Hyundai as well as LG Energy Solutions. At the moment, the Kospi is up 0.2%, while the Korean won is also weakening against the U.S. dollar. Of course, in South Korea, we'll also be watching for the jobless rate to come later in the week. But it's really all about Japan today and the political landscape after Prime Minister Ishiba's resignation set in motion a leadership race that may generate concerns for investors.
While I feel there are still things I wish to do as premier, I have made the difficult decision to step down. But I felt that if I continued amid a vote on an early leadership race, it could have created an irreversible division within the party, which is certainly not my intention.
Joining us now is our economy and government reporter, Erika Yokoyama. And Erika, you were actually at that press conference by Prime Minister Ishiba. Did this come at a surprise, or was it pretty much expected, given, of course, the pressure that he's been seeing in recent weeks?
I would say it's pretty much expected, to be honest, while it's a little bit surprised as well. Like, he seems like sticking to the position as well. But yesterday at the press conferences, he actually looks pretty calm and determined after weeks of calls for his departures. And the focus of the presser yesterday was like, why now? And also, what will be the next as well? Like, in terms of like, why now? Ishiba said that he has been thinking of like taking responsibility of the election loss, while he was also waiting for the U.S. trade deal is firmly implemented. He also wanted to avoid the split divide within the party as well. As you know, like LDP was expected to have a vote today to decide whether they should bring forward the leadership election or not. And the RE survey already suggested that nearly a majorities are voting for an RE election. So there was already divide as well. And as for what's next, Ishiba said there will be of course, the extraordinarily the leadership race, and it's largely expected in October, while like Ishiba didn't specify the date. And he said he's not planning to run again. He wants to succeed it to someone who can deal with his priority, including like wage growth or trade deal implementation, as well as the national security.
As we wait to see who that someone will be, how do you see these scenarios shaking out and what their market impact will likely look like?
Right. I feel like it's going to be some sort of replication from a year ago. You know, you still remember last September, like 9 candidates ran for the positions. And you probably remember Sanae Takaichi, a female candidate, narrowly lost to Ishiba. And it's highly expected she will run again with her preference for monetary easing and loose fiscal policy. And yeah, that's probably her victory potentially makes the BOJ makes a little bit difficult to proceed with ongoing tightening project, potentially weakening the yen further and lowering the bond price as well. And another strong candidate is probably Shinjiro Koizumi, who recently appealed his ability to do things after he got appointed as agriculture minister and lowered the price of rice successfully. In terms of monetary policy, he seems to see continuity, so maybe bringing less impact to the market. So there may be more candidates as well, including Cabinet Secretary Hayashi. But at the point, I feel like as the LDP is seeking the new face to capture the younger generations or some of the right-wing supporters that left Ishiba's LDP to support far-right Sanseto, the market expects the higher chance for a conservative Takaichi or young and fresh Koizumi.
When it comes to the economy, of course, much stronger second quarter GDP numbers will be very consequential for the Bank of Japan. Right. But at the same time, what are some of the other concerns that we're watching across Japan when it comes to this leadership election and the future of the country?
Right. So beyond the monetary policy, there'll be lots of issues as well and challenges as well. Especially the new leader, whoever it becomes, has to face the minority situation in the chamber. So, for example, towards the end of the year, Japan has annual tasks including economic package, extra budget, annual tax revisions, and the annual budget as well. Then last year we saw lots of trouble as the ruling coalition couldn't find agreement with the opposition party. The government was working on these projects after the Christmas or even the New Year's. And the first things that the new leader has to deal with would be the economic package. Ishiba already said that the LDP wants to do the 20,000 yen cash handout to lower income group, while opposition parties calling for the sales tax cut, right? Then that was one of the major causes behind the LDP's great loss in the election. So I think that's the first things they need to find the answer, as well as the trade negotiations implementation as well.
Erica, thank you so much for running us through all that. Erica Yokoyama is our economy and government reporter. Now let's get more insights on the markets with Dilin Wu, research strategist at Pepperstone. Dilin, really good to see you. First off, we are seeing not just, as Erica was highlighting, those monetary policy concerns, also what Japan does fiscally speaking at the time when the long end is already a focus globally. What is your sense of the curve steepening? How much more is there to go from here?
Well, actually, Prime Minister Ishiba's decision to step down to me ahead of the LDP snap leadership race looks a pragmatic move. And the spotlight now shifts to who takes over and whether this could bring political stability or shake up this kind of coalition dynamics. And for the Japanese government bonds, it has already reached the historical high. I mean, the long end from last week. And at the moment, I think the BOJ is really in a tricky spot to add any interest rates or to implement any rate hikes for this year, because the market has just priced in a 12 basis points rate hike by the end of this year. And I think probably we can see a weaker yen down the road and also higher the GJB rate.
This higher long end yield is really a global story, though, right, Dilin? I mean, we have the UK DPM resignation. We have in France some of these fiscal concerns as well, with the Prime Minister potentially losing a confidence vote. What are you watching globally speaking?
Well, I personally look into the Nikkei performance because obviously the Japan has got a 50% tariff from the US, and ideally this is a plus for the Japanese equity. And but with this kind of domestic political uncertainty, we probably see some losing of the confidence from the Japanese traders. And also I will look into, how this kind of political landscape will unfold in the following months and who will take the Ishiba's position.
When it comes to the broader Asian equity markets, we are also waiting for export numbers out of China. Is the Chinese market an alternative to a lot of this uncertainty, even as you mentioned with the politics landscape changing here in Japan?
Well, I mean, sure, China is obviously a market very interesting to look into. And for the export data, actually the exports in the first half of the 2025 to the US decreased by 1/10. And I think is a really healthy shift for more resilience to the Chinese exporters. And also we're looking into the retail sales data and the NPC meeting down the road from this week. And I think if there's more, stimulus to put in place and more stimulus expected to be in place in the AI sector, then I would still be bullish to the AI sector in the Chinese equity market.
Yeah, let's talk a little bit about that AI momentum that we're seeing, not only in the Chinese market, but across Northeast Asia. How much legroom does that rally have, especially across Japan, across South Korea as well, with some of those semiconductor names?
Well, I think if we start from China, recently both the CN50 and Hong Kong 50 has been consolidating at elevated levels, and many of the international capitals just flooding into Chinese tech as a new deployment sector. And from established names like Alibaba and Tencent to some newer startups like Cambridge, and these stocks have done much of the heavy lifting for the rally. And what really kicks things off were some eye-catching earnings reports, but the real drivers go deeper. I feel like it's a mix of tech breakthroughs and policy support. And I mean, on the tech side, DeepSeek V3.1 has boosted confidence in China's domestic computer power and also the broader import substitution story. And on the policy front, Beijing just rolled out the AI Plus action plan, targeting a 90% AI implementation by 2030. And I personally feel like against this backdrop of U.S. and China rivalry, tech is not just a market fad; it's a policy-backed long-term growth pillar. And I feel like policymakers are also really notice this kind of situation. So for me, I think probably like the Hong Kong 50 or the Chinese or the Southeast Asian kind of tech narrative can be go down the road, and the CN50 can be a substitution of Nasdaq in the future.
Aside from Chinese tech, when you look at Asia tech overall, how helpful is the Fed cutting likely to be? How much of a tailwind is that? Because following the U.S. jobs data on Friday, it seems investors are increasingly just focused on the path of Fed rate cuts. There's that repricing going on as well.
Yes, right. I feel like although the job report was quite sluggish, but it doesn't materially change the near-term policy outlook of the Fed. A 25 basis point cut is still likely be the case in September's meeting, aimed at providing a bit of a insurance kind of cut in the near term. But the upside inflation risks do present. So I see little chance of any front-loaded cut, where the chance of a 50 basis point rate cut in September. And I mean, my base case would still be a 25 basis point rate cut in September and another 25 basis point in December. And I think the rate cut is obviously a bullish factor for the equity market in general, but we're not just looking at the federal rates policy, but also into the economic outlook. And with some strong, like tech advance backing in behind, I think I would be still optimistic about the AI sector in the Asia market.
Dilin, what does all of this mean for the U.S. dollar, given that on the other side of that trade, we not only have the Japanese yen that sees continued pressure, but we also have, of course, the euro. We do have the ECB rate decision this week as well.
Well, I feel like the market has already not fully priced in a rate cut in this ECB meeting. And I feel like one of the black swan events I will look into, and maybe some of the market participants ignore, is if Cook really were to leave earlier, or will be kicked off in the near term, then market participants will be eager to figure out what this means for the future path of the federal interest rate and the Fed's broader policy toolkit. And this kind of uncertainty tends to widen the range of views, and when potential outcomes are more extreme and harder to gauge, it can hurt liquidity. And that's, I think, when we could really see the dollar drop sharply and go spike. So apart from this Fed rate cut narrative, I would also look into this kind of early step down potential of Cook.
Dilin, thank you for your insights. Dilin Wu is research strategist at Pepperstone now, as we've been unpacking not just the U.S. jobs data and the impact on the dollar. We actually are seeing the U.S. currency climbing, reversing some of Friday's decline. The Aussie dollar is coming under pressure. We're also seeing a slide in Australian stocks. In terms of the 10-year, you are seeing that yield creeping up in U.S. treasuries. Flip the board, take a look at some of the movers in the Australian session. We are hearing, of course, that potentially the Abu Dhabi consortium that has been pursuing Santos, the Australian energy producer, they could be mulling $10 billion worth of financing for that. Santos, for the moment, is down, as are some of the other energy-related names. This is, of course, after the OPEC Plus decision, the commitment to hiking supplies from October, though some have actually characterized this as a relatively cautious move in terms of what this could mean for supplies in energy in the market. And let's also take a look at some of these South Korean names, because, of course, we also have been unpacking that story related to U.S. immigration raids on these EV battery plants in Georgia, and how there were detentions of employees from Hyundai as well as LG Energy. These are the counters that are in focus. They are down for the moment in South Korea. More ahead on the Asia trade. This is Bloomberg.
We heard about it yesterday. At the same time, ICE was doing right because they were here illegally. But we do have to work something out where we bring in experts so that our people can be trained so that they can do it themselves. Does that make sense? Right?
Is it straining the relationship with Korea at all?
No, we have a great relationship with South Korea.
President Trump there commenting on the immigration raid at the Hyundai-LG Energy EV battery factory in Georgia. All of this at a time, of course, when the U.S. and South Korea have just struck a trade agreement, not to mention that Korean companies have now agreed to invest hundreds of billions of dollars in the United States. We'll be watching Hyundai Motor down more than 1.5% at the moment. We have seen them pledge $26 billion through 2028. But, of course, Hyundai's broader EV production plans now in question given this immigration raid. We know that the construction on the Georgia plant has been temporarily paused. When it comes to South Korea's government, it secured the release of hundreds of their citizens detained in that U.S. immigration raid in the state of Georgia. Let's bring in Bloomberg Seoul Bureau editor Danny Thomas for more on this story. Danny, so what do we know at this point about what triggered this investigation and where these citizens go from here?
Well, this was, according to ICE, this was in the works for many months. So it only got concluded on Friday. In terms of what happens next, I think the discussion around releasing them has been concluded, and what we understand is that on Wednesday there will be a chartered flight which will bring most of these detained workers back to South Korea. In terms of the diplomatic kind of the rift now, the foreign minister of South Korea is going to be heading to U.S. today, and I think some of the industry lobby groups, what they're trying to get the message across to U.S. is that they don't want to see a repeat of this, because more important, I think South Korea feels a bit betrayed that just 2 weeks after some of the biggest companies came out with big investment pledges, you see the workers being detained. And the images and the footage and the photos of that being released was a bit of a blow to South Koreans here. So that is what the message the foreign ministers will be trying to convey, and trying to make sure that the visa issues that have previously also come into the picture get resolved in a way that, you know, these kind of humiliation is not repeated.
Danny, there's still a bit that we don't know, including what sparked these raids, and to what extent you think this might cast a shadow on some of these South Korean investment pledges into the U.S.
So clearly there is going to be some tangible impact. We're already seeing LG trying to push back the start of its project. So there is going to be some fallout of this. How damaging will it be depends on how quickly South Korean companies can get visas. That's been one of the issues they've been trying to get resolved, that as you bring in more money into the country, you need more workers to work on these projects, and not having proper visas and documents for workers to work, it's going to delay the work. And that's what I think this particular issue is going to snowball into, where the US can get the visa issue sorted for the investment that is to follow.
Danny, did we have more clarity on how these Korean investments into the U.S. would work out? Because they were talking about funds and sharing of profits of billions of dollars of investments. But of course, we haven't seen that many details so far.
Yeah, so I think there are two components of it. The $350 billion is going to be largely in terms of loans. And what South Korea has tried to say is that only less than 5% of that amount will be in actual investments, as in equity investments. So there has been some dispute around that, but I think that's where South Korea has kind of been sticking to its gun. And this did not come up in the summit between President Lee and Donald Trump. So I think that's kind of resolved, or maybe there are still something to resolve. On the other hand, there's a bigger component, or kind of chunkier component, which is $150 billion that the South Korean private companies have agreed to invest in. And that will be mostly in terms of equity investments, and that's where the big dollar is flowing in. So that's where things stand now.
Danny, thank you for talking us through the state of play. Danny Thomas is Bloomberg's Seoul Bureau Editor. We'll have more ahead on the Asia trade. This is Bloomberg.
We continue to watch the latest when it comes to the leadership election of the ruling LDP here in Japan after the resignation of Prime Minister Ishiba. The LDP's Aizawa now saying that they will set the leadership election date on Tuesday, so we'll be on the watch for that. As we continue to see the Japanese yen weakening, as you can see there, against the U.S. dollar towards the 149 level. This, of course, as we continue to see political volatility and uncertainty here in Japan. And two-year yields at the moment are lower, so we are seeing the curve steepening in Japan, April, foreign outflows and political concerns as well, and all of this really having implications for assets across Japan.
Indeed, and as you say, the yen is weakening. It's weakening against all major currencies, including the greenback that is seeing a slight bump from Friday's performance following weak U.S. jobs data, which prompted a repricing in the Fed's rate cut path, 25 basis point fully priced in for September. And beyond that, something October, December, another few cuts is a possibility. We are seeing still that stuff keep curve steepening trade at play, and U.S. stocks picking up slightly. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how Asia markets are faring. We are seeing Japanese stocks bouncing with the yen weakness that's come through and breached the 148.5 level, which is, of course, a key level that we've been watching. South Korea stocks seeing a bit of firmness, but really not by much. And we have with us now Diana Mousina, Deputy Chief Economist at AMP, who hopefully will get for some analysis in just a bit. But for the moment, take a look at how Australia stocks are faring. They're down about 0.2% among the sectors that we are watching in the session, not just Japanese stocks overall, but also about these energy names following on from OPEC Plus over the weekend committing to hike supplies, though some have called this relatively cautious move. Maybe some of it was already priced in by markets. You are still seeing Brent hovering at almost towards the $66 handle, and WTI at around 62. Gold is also seeing a bit of firmness for the moment, Shery.
Yeah, I mean, we have been following oil prices a lot because we have seen that pressure over the past year down more than 10% or so, and OPEC Plus continuing to change strategy and really announcing that production boost again. You talked about that 137,000 barrels a day from October. That's only the first part of a 1.65 million barrels a day tranche. So we'll continue to watch how the fluctuating oil price really affects also equity markets globally, of course, and what that means for the broader economy as well.
Yeah, Shery, let's bring in Diana Mousina, Deputy Chief Economist at AMP. Diana, we're still unpacking what we got from the U.S. jobs numbers on Friday. Investors seem now so focused on the labor market, it seems easy to forget we still have a CPI print coming this week. How clear do you think the path of the Fed is for the rest of the year?
Well, I'm taking my cues from what Powell said a few weeks ago, where he basically reiterated that the Fed's focus, at least in the short term, is probably going to be on the labour market, because the pressures on inflation, at least in the US in the short term, are more around the impacts from tariffs and how that's going to increase consumer prices rather than a demand-driven increase to inflation. So from the Fed's point of view, I think if these are supply challenges increasing inflation, then they want to focus more on the labour market, basically to prevent any sort of serious downturn in jobs growth. So even if we get a hotter CPI print, I think the Fed's next move is still going to be a cut, and we should be expecting probably a few cuts from the Fed in the next 12 months.
What are you expecting out of Chinese economic data? We're going to get trade numbers as well, and potentially we see that loss of momentum in exports, which for a long time have been a key pillar supporting the Chinese economy.
Well, in this particular month, the pace of export growth is expected to soften a little bit from last month, but it's only really because of base factors rather than the actual renewed start of slower global demand and growth. If we look at container freight shipments around the world, they're actually still holding up very well, particularly coming out of China and also out of broader Asia, going into the US and other Western countries. So I don't think that we're actually seeing a global slowdown in demand or in export growth, and global growth seems to be holding up at about its long-term average, which is around 3% on a yearly number. So there doesn't really seem to be any large negative impacts from higher tariffs around the world. So more or less, Chinese growth is still holding up relatively well, even though this month we are going to see some softer export numbers.
And perhaps softer inflation data also later in the week. What's domestic demand looking like within China, aside from external factors? And what are the implications for other China-dependent economies across Asia?
It's sort of a tale of two cities, I guess you could call it that, because there are still some very strong parts of China, like industrial production, fixed asset investment too, outside of property. The property market, though, is still incredibly weak, and we are still seeing home price growth down 30% on a year ago, and investment into housing has been fairly subdued as well. But other sides, like the industrial production side, especially areas related to things like electric vehicles or solar panels or investment into the green and the new economy, is still holding up incredibly well. So it is quite a mixed growth picture in China, but when you sort of marry up all the different factors, it still looks like the Chinese economy is going to grow by 4.5% or 5% this year, which is enough to generate the sort of global demand that you would want. China itself contributes about a third of global growth every single year, and that's likely to remain the case in 2025 and 2026. So that's what's important for countries that are reliant on Chinese demand, other parts of Asia, and of course in Australia too.
Growth here in Japan very strong as well. In fact, the second quarter final number surprising to the upside, annualized 2.2% growth. What does that mean for the Bank of Japan? Because we were expecting potentially a rate hike in October, and yet we have this uncertainty on the political landscape.
I mean, in the short term, the Bank of Japan may just hold steady and try and sort of let the dust settle after all the political changes in the economy. I mean, I think it's still the case that the Bank of Japan is going to keep hiking rates, but we also need to understand what the new government is going to do around fiscal spending. That's probably the more important thing here for Japan, and how that impacts the economy. Despite that strong growth number, in the last 18 months, the Japanese economy hasn't really been particularly strong. So there is still the need for more fiscal stimulus, I think, but the Bank of Japan may want to just let the dust settle.
Meantime, we are seeing that sort of fiscal impetus in the U.S. We are still trying to figure out what tariffs are going to mean globally for inflation. We've seen over the weekend OPEC Plus coming through, commitments to supply hikes. What is your sense of how subdued energy prices might help maybe tamp down potential inflationary effects from tariffs?
Well, I guess that's more of a global factor that could help to ease some of the inflationary concerns around the world. But at least in the short term in the US, we can see that tariffs are having an impact to consumer prices. Things like durables and non-durables have been increasing in the past 2 to 3 months. We know that the average tariff rate is running at about 11% in the US. Compare that to about 3% before Trump started. So it does take time for these tariffs to actually hit price growth. And I think that in the next 6 months, US CPI is going to get up to about 3.25%, maybe even 3.5% on a year ago. But some of the Fed governors have said that they would actually look through the short-term upside impacts to inflation, especially if it was just a one-off or potentially even just a few months' worth of higher prices. So I guess the point is, will the tariffs continue to impact inflation? I think that that's probably unlikely to happen. The tariffs are just going to have a short one-off impact to raising prices. The other global factors around lower oil prices, for example, is good news in trying to keep global inflation weaker.
What have all of those dynamics meant for Europe? We do have the ECB rate decision this week as well.
Yeah. Well, the Eurozone economy has actually been doing relatively well. The unemployment rate across the Eurozone on average is still at a relatively low level. They haven't really seen the increase like New Zealand, Canada, or even the US has. I mean, there are still some political challenges in Europe at the moment, for example, things that are going on in France. With the vote of no confidence in the Prime Minister. So that's why we've seen bond yields increasing in Europe. But European equities have been doing incredibly well in 2025, actually on par performance with the US, and they were outperforming the US in the first part of the year. And if we think about the outlook for Europe, there's going to be more fiscal spending that's going on, particularly out of Germany, more defence spending as well. So I think that Eurozone economic growth is actually going to look pretty strong in the next 12 months. And I think that that should mean good news for European equities as well.
Diana Mousina, really good to have you with us. Deputy Chief Economist at AMP, had a very busy week when it comes to eco data and monetary policy decisions as well. We have more ahead on the Asia trade. This is Bloomberg. Take a look at how Japanese bonds are trading at the moment. Of course, JGBs, the direction of this market, very key and consequential for global markets as well, at a time when we continue to see the yield steepening, the yield curve steepening, that potential Bank of Japan rate hike potentially delayed given the resignation of the Prime Minister. Traders pushing long-end yields higher at the moment, and we could see more volatility. The 30-year JGB yield already traded at record highs last week. Rising inflation, growing fiscal concerns, of course, a key question here in the Japanese economy. And we already saw the second quarter GDP final numbers surprising to the upside as well. But let's talk a little bit about the political uncertainty here in Japan that might really put into question where the markets go from here. Joining us now is Purnendra Jain, Emeritus Professor at University of Adelaide's Department of Asian Studies. Great to have you with us. I mean, what does this mean for who could become the next Prime Minister of Japan in the next couple of months?
It's quite complex at the moment. As you know, Mr. Ishiba, the current Prime Minister, announced yesterday at a press conference that he intends to step down, and that's going to be a very complex process following his announcement to resign, because it's not so straightforward. First, the LDP has to elect a new president, and that president will then present himself or herself to the parliament, and the parliament has to endorse that person's leadership as Prime Minister of Japan. And given that the LDP doesn't have a majority in the lower house or even in the upper house, that's not going to be as straightforward as in the past. Because in the past, when a LDP president went to parliament with a majority in the lower house, it was almost certain that that person will be elected as prime minister. So this time the situation is much more complex.
Yeah, with a weaker LDP, does that mean that they will have to really negotiate with opposition parties? And what does that mean for a potential economic package to come later this year?
Yes, most definitely. Mr. Ishiba ran a minority government. The LDP already has a coalition with a party called Komeito. But even the LDP Komeito coalition numbers are not enough for them to have a majority in the lower house. So the new leader, whoever that might be, will have to negotiate with some opposition parties, kind of like-minded opposition party or parties, who will come on board with the LDP new leader, so that a simple majority could be maintained in the lower house for legislative purposes and for policy purposes, and of course for economic purposes. It depends who that leader is, because leaders have different viewpoints on how they want to handle the Japanese economy, whether it is in terms of monetary easing, whether in terms of fiscal stimulus. So we have to wait and watch as to who the new leader is and what kind of policy that leader is going to announce on economic front, as well as on many other domestic and political and foreign policy fronts.
On foreign policy, when it comes to tariffs, of course, last week we also saw the U.S. and the implementation of the trade agreement with Japan. Do you think that process might potentially be affected given what's happening domestically in Japan?
Yeah, I mean, one of the reasons that Mr. Ishiba was resisting the pressure to resign, telling the party and government that he has got some very important jobs in his hand. And what he meant was the negotiation process, the process which was taking place between Japan and the Trump administration about the tariff issues. So finally, Mr. Ishiba's team negotiated a deal with the United States of America that there will be a 15% tariff, and also on the auto sector, which was about 25% or 27% initially. Mr. Ishiba's team negotiated down 15%. So I think there is now a presidential order signed on that 15% tariff across the board on Japan, and that is what triggered. That was a trigger for Mr. Ishiba to accept the pressure, and he announced to resign, saying that the job which he has in hand, he has completed that, and he didn't want to split the party. And in the interest of the party, in the interest of the country, he said he has decided to resign.
In the interest of the party, it's also about this process of party reform. How do you think the LDP should perhaps regroup? What else needs to be done?
Well, they have to, in my view, looking at Japanese politics for the last 30 years and studying and researching, I think they need to really have soul searching and do a wholesale, a kind of overall overhaul of the party system and the way politics is done, we know that the LDP is under immense public scrutiny because what happened during the Abe era, that is in terms of financial scandal, that is money collected and not reported. So that also became an Achilles heel for Mr. Ishiba as well, because that issue has not been actually tackled head on. So the public is still very distrustful of the LDP and the party and the leaders. So they have to do something about it, come clean on these issues. If they don't do it, then I see further turmoil in Japanese politics. And as we know, the opposition is fragmented, divided, and they don't have any united policy front where they can challenge the LDP leadership. So it's a big mess at the moment. How they are, if they don't sort it out quickly and and win the public trust, it will be bad news for Japan. It will be bad news for the world, because the world, Japan has been in a leadership position in many ways, and the world wants a stable Japan and a stable policy and some kind of leadership, regional leadership. Japan also faces immense, regional.
What's been really interesting as well in the last election last year was the emergence of these far-right groups, right, that really centered around anti-immigration issues, even xenophobia at some point. It seems to be that really populism is growing across the world as well. How much of an identity crisis will that present for the LDP as well?
Well, the LDP has to tackle the issue of migration and the issue of what they call over-tourism. Because generally speaking, it's good for the economy, 20 million people coming to Japan from overseas in the first half of 2025. At the same time, it puts pressure on local people, it puts pressure on infrastructure, it puts pressure on in many other ways. And Japan, which is not used, Japanese who are not used to having these many foreigners in front of their eyes, they feel really overwhelmed. So there has to be some kind of public education. There has to be some kind of, public policy around these issues, because no one wants a xenophobic Japan emerging, because Japan's image has been a peaceful Japan, a pacifist state, acceptance, of foreigners. So these things, the LDP has to really think long and hard and make some hard decisions about these policies. About San Seito, of course, this is we should not dismiss it. There is a bit of a movement there, but we have seen in Japanese politics many new parties emerging and disappearing. So it's very difficult to say precisely at this stage how far San Seito will expand its influence and its numbers in parliament. So these are very uncertain times for Japanese politics.
And the world watches as the LDP and indeed Japan searches for its next leader. Professor, thank you very much for your analysis. Really good to chat with you. Purnendra Jain is Emeritus Professor at University of Adelaide's Department of Asian Studies. We'll have more ahead on the Asia trade. This is Bloomberg.
Take a look at how Japanese assets are trading at the moment. We continue to see the yen under pressure against the U.S. dollar. 2-year yields falling while the longer end JGB yields are gaining ground. Remember, the 30-year yield has already touched that record high last week. Concerns about inflation, concerns about the fiscal picture as well. And of course, that doesn't get any better now that we have the resignation of Prime Minister Shigeru Ishiba. What it means for the next Prime Minister could be more fiscal stimulus, because we will expect more negotiating with opposition parties by the ruling LDP, which of course does not hold a majority in both chambers, and that could mean more spending by the government. In the meantime, we're seeing Nikkei futures, Nikkei stocks at the moment gaining 1.7%. The topics also up about 1%. Avril, of course, weaker yen. Also, the short end yields falling at the moment, really leading to that boost in the stock market as well.
Yeah, short-end yields following what we saw in U.S. Treasuries, potentially those Fed rate cut bets, but the troubles are really related to the long end globally. You're seeing that on the U.S. 30 years and in Japan. Of course, the concern is whether these higher yields in Japan prompts a repatriation of funds back into the country and what this could mean for global debt overall, Shery.
Yeah, we're following also what will happen across China as we get those eco numbers. We are expecting that export growth probably slowed in the month of August, and you can see A50 Chinese futures closing to the downside of 0.3%. We are expecting also inflation numbers out of China this week. On Wednesday, factory gate prices probably narrowing their decline in August for the first time since February. We'll be on the watch for what that means also for the broader Chinese economy and also for those AI-related stocks that we've been following very closely in the Chinese and Taiwanese markets as well. You can see U.S. futures pointing to the upside of 0.2% after finishing the Friday session lower. Remember, we also had the sharp cooling in the jobs market and that flight to safety in the U.S. session. But that's it from the Asia trade. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai, and Shenzhen. The China show is next. This is Bloomberg.